Good evening, viewer, and welcome to Take on Tech. Take on Tech is a program that comes to you every Thursday evening, and it breaks down technological issues so that ordinary people can engage, can understand, and can see how tech issues relate to them. In today's program, we are going to be looking at Fintech, the opportunities in Kenya and in Africa. We'll be looking at the definition of Fintech, some of the case examples, and how Fintech relates to you as an ordinary person. You can engage with us via Twitter, and our hashtag is hashtag TakeOnTech. You can also tag me at Jigidaiga and the rest of the panelists. Now, Kenya is known as a hotbed of fintech innovation. But what conditions have contributed to this phenomena? This is our discussion today. So we will look at the current policy and regulatory issues. We look at the framework. We look at what opportunities exist. We look at what pitfalls are there. And time allowing, we will look at other issues that have contributed into this revolution. Now, to discuss the topic with us, we have Mary Mwangi, and Mary Mwangi is the Chief Executive Officer of Data Integrated Limited. Karibu, Mary.
Asante sana.
Next, we have George Njoroge, who is the Chief Executive Officer of East Africa Data Handlers. Karibu, George.
Asante sana.
And finally, we have Ali Kasim Hussein, who is the co-founder and CEO of Kipochi. I believe Kipochi is wallet for Swahili. Karibuni sana. Yeah, so I think we'll go straight into the issue because we want to understand what fintech really is. So that when we talk about fintech, we are well conversant with the issues. And maybe, Ali, you can start by telling us what exactly is fintech.
So, fintech is sort of short or acronym for financial technology. And in its broadest terms, it basically means the use of technology to deliver financial services. I think one of the best examples in Kenya and probably worldwide is M-Pesa. M-Pesa is actually a fintech. And usually what really has happened is financial services has been with us for hundreds of years in the form of banks. But because of certain regulatory concerns, because of how banks have operated for many years, there has been a gap in how financial services actually serve customers. So fintechs have sort of come and started to fill that gap. Best example in Kenya is a few years ago, if you wanted a micro loan, if you wanted a loan, there was no way you could actually get a loan instantly. If you had walked into a bank, the earliest it would have taken is probably a week. Today, with access to technology and availability of being able to be, credit checked on the fly, you can get loans of up to 3-4 million shillings instantly.
Without collateral?
In some cases without collateral, because the credit scoring algorithms behind the technology would inform whether it's the bank or the fintech that this person is actually credit worthy. So you have a situation where technology is bridging a gap, and a major gap. We hear words like financial inclusion being bandied around, but we really haven't understood the extent
Okay, we'll come to that issue of
Okay.
financial inclusion
Okay.
later in the program. You have touched a bit on some of the examples of fintech, and I think Mary, you can pick it from there and give us some of the practical examples of fintech.
I think when you look at fintechs and trying to give examples, we are going to first start, like Ali has said, with M-Pesa. But M-Pesa is almost like a combination of a lot of fintechs in one. You have the M-Shwari where you can just borrow. You have the Lipa Now where you can go and pay at the shop. You can also pay your bills also through that. You can also send money from person to person, which is the original way that M-Pesa operated. So those are fintech examples of one company. But then we also have companies that are doing crowdsourcing, like Mchango. So nowadays you can just download an app and you can all contribute for a funeral, for something. And that's Mchango.
Mchango, sorry, is different from the pay bills that we have during funerals?
It is actually, because what they do is you can put Mchanga, that's what the company is. You can actually get any different thing that you want to contribute for. I think M-Pesa also has now a pay bill number that you can use to actually raise money. But the traditional way that we used to raise money, there's a couple of companies that actually come to mind that are doing that. And then you have companies that are sector specific. So you have companies that are lending to you, not just M-Shwari. You have people like Tala. You know, you want to get money, you just go download the app and you're able to get money. You have InsurTech companies where you can get easy insurance from these companies. And then you have companies that are wallet-based. And for wallets, as a fintech, you can look at even banks themselves.
Before you continue, maybe you need to tell us what wallets are, fintech wallets. Just break it down for the ordinary user.
Okay. So a wallet is basically electronic money storage that you download to your phone. Or, yeah, you just have it electronically. So basically, it's like the wallet you have in your pocket, but this is something now that's electronic. You don't have to have physical money. You have electronic money on there. And then there are all different kinds of wallets. There are wallets that you go and you put money in for paying a bill. It only allows you to do specific things. And then you have wallets that you can actually just hold money for you that you can use for different transactions across the board. And then there is also wallets that are actually just specifically issued by banks. So your bank wallet is tied to your account. Those are the types of wallets.
Okay. Bank wallets, insurance wallets, lending wallets, savings wallets. They're sounding, they're two, those are the different, I guess, different categories. And I assume wananchi are using them. George, maybe can you comment on the operating environment of all these different wallets?
Well, just to make it very simple for the listener to get a better understanding of what fintech is all about, is when you look at a situation where you've interacted with your bank without physically having to walk to the physical bank, then you have said to have interacted with the fintech or with the financial technology side of the bank. Now, when did fintechs, just to try and bring the whole context, become relevant? Is after the meltdown of the 2008, when sort of there was a global economic meltdown, a lot of commercial banks spent a lot of time trying to fix the issues that had made the economies of the world go down. Issues like policy, issue of how they were lending and how things were being done. But they left a big space in innovation that a lot of customers were lacking innovation. So that space started being filled up by technological companies that were coming to offer customers who are no longer patient with the commercial banks to become innovative. And these are examples of things that we have interacted with on every day that we do not find them as fintech, but have become fintech. So issues like digital banking, where you move money from your commercial bank to your mobile wallet without necessarily requiring you to physically walk to the bank, that is fintech. When your brother living in the US sends you money and instantly you receive it, that is fintech, because technology has enabled the movement of that particular transaction from wherever it is to wherever you are without necessarily requiring you physically. When you travel around the world, several years ago when I would travel, I'd find myself exhaustively trying to find dollars the whole day because I'm going to be traveling. Now I no longer even struggle with that. I only need to have my credit card with me or my plastic card, and I travel. I know technology will work for me. What are the pitfalls? The biggest pitfall is data. The privacy element in fintech is lost. And the privacy element is a lot of data are being used to decide whether they will lend you money. And you must understand that the minute you think that the mobile lending applications lend you simply because they like you, they don't like you. They simply have taken your data somewhere, they've mined, it's called mining, they've processed it. Now they've made a decision whether to lend to you based on the information they have seen on the data they have about you. Now, without you knowing, is that they took an analysis of your entire text messages, so they got to see maybe who is demanding money from you, how many mobile transactions you're doing in a single day, how often you make and receive calls. All this data is used to make a decision whether to lend to you or not. So that's why instantly you find that two people who are sitting next to each other, me and Ali, will get maybe 50,000 and I'll get 20,000 based on how they've analyzed us and made a decision on us. Now, that is the biggest risk. The other risk is cybersecurity. Now, as we move on, the world has become very digital. If we move into a meeting, everybody within a minute grabs their phone and we are all busy with our mobile devices. So the risk that technological theft of our information is becoming very real. The theft of our identity, then somebody uses our identity to make our decisions. The risk that material information that is about us can be used to do certain things plays a critical role in the future of us playing with technology. So as much as we embrace technology, there are genuine pitfalls that are there that we must be aware of, and we must understand that there's a day that will come that you'll find that your account has been swept clean and it's zero, not because the bank decided to not be careful, but simply because certain elements that are natural, maybe you gave your password out or something happened and somehow you lost access to some of this data that you genuinely will become conversant with, which is we are now enjoying the fruits of technology.
Yeah.
Yeah.
That's quite interesting. Issues of identity theft, data mining without the consent of the users, and I think we look forward to having that the data protection law will take into consideration such issues.
Yeah.
Ali, and of course I've had very very funny cases of when people borrow and they don't pay the minute, for example, on M-Pesa somebody sends you some money, that money goes immediately to the Fuliza.
Yes, yes.
And I've just been wondering the legality of that and whether the company has a right to do that.
Take your money.
And then we've also had examples of, if you've not been able to pay, that all your contacts receive a message, telling you.
Those are the challenges of
Yes.
privacy issues.
So Ali, can you take it from there and just tell us some of those, what are some of these regulatory concerns?
Okay, so, I mean, look, data has not been made available just because of the computer age. We've always had data. Whether it's with government or with financial institutions, I think the issue today is just that data has been weaponized, if you allow me to use that term. Weaponized in the sense that it's now out there in the cloud. You know, when we talk about cloud, people think that
mawingu.
ni mawingu, but these servers are somewhere.
Yeah, please break it down for wananchi
So,
who think that
so-
clouds are actually mawingu.
so cloud, I mean, if you've heard the term cloud computing, it simply means that organizations have outsourced their computing power to other companies. Companies like locally, you have companies like Angani, North Africa. Globally, you have companies like Amazon Web Services, Microsoft, Google. You know, if you just think about your Gmail account resides in the cloud. But the cloud is simply massive computer servers that are stored somewhere in what are known as data centers. Then because of the ubiquity of the internet now, you are able to actually access this computing power anywhere in the world. So because of that, you now have your data that resides in a computer that you don't own. So the people who manage these servers really, Grace, have the responsibility to ensure that your data is safe, one. But two, governments have a responsibility of protecting their citizens' data. Now, this is a give and take situation, Grace, because if you just think about Mshwari today, I was just reading the papers today that since inception, Mshwari has lent 430 billion shillings in
That is,
7 years.
7 years.
430 billion. You know, just think about that. Tafakari tu hayo.
So if we were to do, like we were to aggregate and give an
Okay.
average every year.
So let's just put it this way, in simplest terms. If M-Pesa was a bank today, it will be a Tier 1 bank. In fact, M-Pesa is bigger than most banks in this country today. That is the power of fintech. Now, you have players who've now come into the ecosystem because of the success of M-Shwari. There are obvious regulatory pitfalls, policy issues to be dealt with. And as much as Kenya is at the forefront, at the cutting edge of you know, the fintech revolution worldwide. I was just reading a report just yesterday, the Global Fintechs Index, and Kenya is #1 of countries to watch in terms of the development of fintech. So that's how we have evolved as a country, and we are almost, Kenyans seem to almost have an affinity without thinking about using fintech. We may not know that we are using fintech, but we are actually using fintech on an almost daily basis. The way we are using Tala, the way we are using Branch, the way we are using Mshwari, the way we are using KCB M-Pesa, the way we are using, you know, Equities, you know, online platforms. This is something that has become so ubiquitous in Kenya that we don't think about it. What are the regulatory pitfalls? You mentioned about some of the players. You would have some bad players who, if you don't pay your mobile loan, they start threatening you. We will send all your contacts on your mobile phone that you haven't paid your loan. You know, they start harassing you with phone calls every 5 minutes. Those are I think what lawyers call legal lacunas, where you don't have regulatory framework or policy engagement to actually deal with that. Now, that's the issue with, well, I'm not sure I would say it's an issue. That's the point of innovation. More often than not, innovation moves faster than policy and regulation.
Okay.
So we have to sort of amend, watch how things are going, curb bad players, bring together associations to sort of self-regulate. So in Kenya, you now have the Digital Lenders Association to try and make sure that bad players, or there is a code of
regulated,
conduct.
Yeah.
But lending is not just, fintech is not just lending.
Okay.
You've got,
We will come to that
Okay.
because we want to see other user cases.
Okay.
I just want Mary to pick it from where Ali has left and tell us, is fintech, would you consider that fintech is bringing digital inclusion to wananchi?
It definitely is, and I will have to agree, because if you look at most of the work that every Kenyan is doing, even from the smallest trader, the people who are trading in the market, or people who are not just selling, like we work in public transport, and even in public transport, as much as people are not knowing this, we have fintech at the back of it. You might not be seeing it yet, but all the businesses have to embrace technology in some sort of way for them to actually prevail or to actually sustain their businesses in the future. In Kenya, in the next few years, it's going to be very difficult, even right now. If you wanted to apply for your passport, for an ID, you have to go to eCitizen and apply. The process behind that is actually fintech, but in a government setting. So even for government services, you are using fintech. To pay for your NHIF, to pay for your NSSF, you go online, you download these applications. It's a fintech behind it that has put these solutions in, worked on it for the government. And so I don't even believe, like in Kenya today, you can actually go through life without, at any point, interacting with a fintech solution. It's everywhere. And starting with M-Pesa also, the number of people that use M-Pesa to send money, to call for orders. You need to order something, you call your supplier, I need to get this. How do you pay them? Either you're transferring money from the bank to their account using your app or a login that you have. That is fintech. And most banks, actually, some of these solutions have been built by fintechs. You might not know the fintechs, but they're third-party providers as fintechs at the back of it.
Would you say wananchi, ordinary wananchi, the mom, the mother, that woman at Marikiti, that boda guy, are they engaging in fintech? Because they need to understand. Probably they're doing, but they don't,
the Fuliza.
maybe.
Yeah, the Fuliza. They're using fintech.
Fuliza.
Ukisha Fuliza, hiyo ni fintech.
Actually, people don't understand, but Fuliza, like you're saying, it's fintech, but so is M-Shwari. So is M-Pesa. Even when I send money to you, that is fintech. The minute you send money from one person to the other, you've actually utilized a fintech solution.
Okay.
Can I give you a very interesting example about how M-Pesa has liberated people, sometimes in a good way, sometimes in a bad way. Since the advent of M-Pesa, when you get a call from Shags, somebody wants money, and you say you don't have money, somebody tells you, si utume tu na M-Pesa. So the connection between actual money and actual having M-Pesa is sort of lost. Somebody is engaging in fintech without realizing.
Yeah, yeah. Actually, the first time I ever heard of Fuliza was in traffic, and this young man comes to sell pencils. And I tell him, of course I don't need pencils. And just to get him out of my way, I tell him I don't have money. Then he goes, si unitumie M-Pesa. And I say, data hiyo sina. And then he says, fuliza. So I asked him, fuliza ndio nini? So he explained, and then, you know, traffic is moving. So I got thinking, you mean getting a loan in Kenya is so easy? Anyway,
but
before...
Fuliza is not a loan. Fuliza is an overdraft. And people do not understand that.
Something, Mary.
Is it? Okay, it is kind of, okay, I guess you could say that it is a loan, but it's not in the actual sense of you're getting a loan that you have terms of when to pay. Think of when your bank gives you an overdraft. When the money comes in,
It is a
they take it
digital
back.
overdraft.
Yeah, it's a digital overdraft. It's like an overdraft protection, and then depending on how much you use it, then your money goes. That's why your money goes immediately when it comes, because it's actually an overdraft protection for your account.
Okay. I think before we continue, there's a question here from Alex Gakuru. And he says, considering the difference between money and cash and how fintech multiply money and economic transactions, would embracing of fintech in total then render dirty cash, then in brackets, notes and coins, printing irrelevant? I think that's a very good question, because he's asking about paper money. Besides being more hygiene, you know, it will save the environment, you know, the issue of paper and coins and minerals for the coins. So I don't know who wants to deal with that, George.
Let me answer him by pointing something out. The banking is changing. And just to make him understand, in the next 10 years, it's estimated that 1 in every 3 of the jobs in the financial world will be gone. So 30% of the banking jobs are gone. And that means it affects legal, it affects the people that work and depend on commercial banks. And the commercial banks, as we know them, will no longer be there. And the World Bank estimates that majority, at the end of the restructuring and the new age banking comes into play, a lot of the commercial banks, as we know them, will no longer be there. And when you think of money and you think of the physicality of it, and you think how much of the physical aspect you use of it, I am one person who rarely touches cash, actual cash. And I'm a guy who largely depends on digital currency. So banking of the future is changing. Now, if we are saying 30% of jobs will be gone and wiped out by technology, what does that mean? And how does that play into the aspect of us thinking about money in the future? Money in the future is changing. And money of the future is money that will definitely interact with us from a different perspective. So the embracing of technology, embracing of fintech, as it were, has to change, and has to change completely. Let me bring a picture of myself about 20, 30 years ago, when my mother was trying to think what I would want to be, and everybody wanted to be a doctor, everybody wanted to be a nurse, a pilot, and all sorts of jobs. Now, as we think of banking and technology, we must put into the context of what does a future banker look like, and how does he look like in the context of 30% of those jobs being wiped out. And when we look at that, we must understand that the future banker is going to be a completely different individual. The future banker is no longer going to meet with customers. So the way we are used to going to talk to the banker, might have this problem, watoto hawajarudi shule, I urgently need cash. That banker that knows you and understands your problem because you've walked in physically will no longer be there. The banker of the future is different.
I have to. Okay.
Okay, I think he has raised maybe something. So Mary first and then Ali.
I think today, if you look at it, no matter how much cash we have, a study that was done by FSD the other day says that 90% of transactions in Kenya are still being done in cash. In Africa, they're still in cash. Yes, cash will go away, but it's not going away as fast. And also, there's also another study that came out that is also saying that people want to visit their branches. As much as we're saying the branches won't be there, I think they will be there, but they're going to serve different things. There's branch actually had to go and open an account because I went to the bank and I said, I walked out and I had to look at the sign again and say, is this a bank? Because they had the coffee shop, they had the places where people can sit down and enjoy.
That's how the
Yes,
bank
yes, but I'm still saying it's going to change. But the branches, as we know it, people still want to interact. People still want to know some of the banking or have the certain solutions being solved one-on-one. We work on a B2B, and I will tell you this. One of the most difficult things to sell to businesses is financial solutions where they don't see you.
What is B2B? You know, you're talking
Business, sorry.
Business to
When you're
business.
selling a business to business, and I am telling you, can you entrust me in collecting your money? Most people, for them to even entrust you, there has to be a relationship. I believe that relationships in banking will still be there. Yes, cash will be out. We'll probably still do the digital, but I believe that maybe the banker will be coming to the businesses and visiting, but still maintain certain relationships.
Okay. Ali?
Can I add on to that? So I think we need to sort of look at how the financial services space is evolving. And Kenya, interestingly, is really at the forefront of some of these tremendous changes. So I'm just looking at the Equity Bank investor presentation of the most current one. And they say here, 93% of all lending now, the transactions is mobile lending on the phone. 7% is through branches. Now, if you think about that and think about the last time you walked into a bank branch and see how many of those teller windows are actually empty.
Majority of them.
The majority of them.
True.
So,
Including closing of branches.
my
Closing
question,
of those
my
branches, yes.
challenge to bankers is very simple. Number one, to Mary's point, branch transactions will continue, but it will not be business as usual. So bankers need to ask themselves, what are we going to be offering our branches, our customers? What is the value addition? Yeah, it's not just about coffee. It's not, I can't, for the life of me, I can't
Sit in traffic.
remember the last time my bank called me and told me, oh, we have all this information about you. Can we offer you this? Can we offer you that? They have data. My brother Georgia has talked about data, but who's using that data? It is the fintechs that are using that data to the maximum. The banks haven't even started scratching the surface.
And I think I want to add one final thing.
Yeah, and as you add what you're adding,
Yeah.
just and in relation to what Ali has raised, I am just wondering, is Kenya ready for a bank that is not brick and
Physical,
mortar?
yes. So I have 4 children, and my children, in honest view, by the time they turn 18, I want to imagine none of them will ever physically walk into the commercial bank.
Agreed.
Alipay is the biggest financial service provider in the world, yet has no physical branches. WeChat did 2 billion transactions last year, and majority of those, none of them were physical. All of them were transfers and payments and buying of items here and there in China. And we must understand that fintech is coming to bring the aspect of financial inclusion. There are over 2 billion people that are not covered in the financial sector. And we must understand the only way of reaching and including them within the financial spheres of the world is fintech. And one other thing is that we must also consider one key consideration, that if we think of the banker of the future, we must think of how we train our financial our financial experts. So those are going to financial schools, economic school of economics, and one thing that they must be able to do is they must be able to study design thinking. Because when Ali asks me that none of his bank has called him to ask and tell him that they have analyzed his data and have decided to do this, is because the future or the future banker is going to be fast to have design thinking.
Completely.
Number two, the future banker is going to be a programmer, not the guy who is a loan analyst. The guy who's studying credit analyst has no job in the next 10 years. And if he doesn't program solutions that can be able to talk to Ali's data and analyze our data and tell Ali, I have this solution for you, I can provide this service for you. Or the final thing that will happen to commercial banks is that the brick and mortar banks will be pushed to do back-end things, touch the physical money, count, do transactional balancing and all that, yet fintech will come to the fore to offer very juicy solutions to customers. Because fintechs are not interested in collecting deposits and all that. That can be done by brick and mortar companies. Fintech are interested in offering insurance solutions that are technology driven, that are interested in ensuring that they use your data to make you have a more easier life in the way you do things than just merely just having banking service.
Yeah.
That's the future.
Yeah,
Can
we
I
have
give you one
about
example?
3 minutes to
wrap up.
To wrap up.
Okay.
And I'm thinking there are too many issues actually coming in. We may have to request the producer to allow us to do part two.
Yeah, part two.
And as you answer that, there's somebody here, Tohir Kasim. Unfortunately, Tohir Kasim, your question, reference the documentary New Money, China. I haven't watched it, and I don't know if my panelists have watched it, but he wanted to, he asked, do you see Kenya come to this level? Maybe that's something we'll handle another day. Let me allow you.
Okay, so
to focus on
maybe
what?
to answer Tahir, the answer is that we're already halfway there as far as Kenya is concerned. But to just maybe add on to what George said about the banker of tomorrow. There's a thing that I always ask my banker friends. In today's fintech world, where does this term, rather, is this term end of day? In banking, there's something known as end of day. You must close transactions. Does it have a place in banking anymore? Considering the fact that I'm transacting 24/7. So where's this end of day thing, coming? So is technology going to be answering that? On the B2B side, the business to business side, we have internet banking today. We have billions of shillings and dollars being transacted without people ever seeing each other. So really, my dear sister Mary, that ship left the station, rather the dock. Guys are already engaging. The question that we must ask ourselves as a country and as a continent, what policy interventions and what regulatory frameworks are in place, number one, to protect consumers. Number two, to enhance the fintech ecosystem, because M-Pesa has shown us that we can leapfrog a lot of technologies and be ahead even of countries like the US. That, to me, is the opportunity.
Okay, because of time, I think we'll just give you closing remark and very brief. Mary?
To me, when I look at fintech and I look at where Kenya is, it's a very positive place. But I also think that we have a lot of other a long way still to go when it comes to fintech. And we're having some other countries also lead in certain ways. I think M-Pesa is good. We shouldn't be comfortable that we had M-Pesa and that happened. If you look at in the future, like you're saying, it will be all about integrations, and all payments, all matter payments will be integrated. It will be actually global. We cannot look at it and think that it's going to be a Kenyan thing. You develop one thing here, it will be used everywhere. And so we need to keep innovating with that in mind.
All right. George, comment fupi.
The future is data.
Yeah.
And anybody who's trying to do innovation, anybody who's involved in any form of innovation, understand that the future is data. You may not be lending money, you may not be doing all sorts of things, but if you have the edge on data, then you will be the king in the future.
Ali?
For me, I would like to just maybe re-emphasize what my sister has said, Mary, because she said something very important. We cannot rest on our laurels. We cannot continue to sort of wing it because we've been so successful as far as M-Pesa is concerned. You know, Alipay does $2.8 billion of loans every day. So yes, I know that's China, but you can imagine that level of data and that crunching of numbers and that ability. So data is a double-edged sword. It is something that can be used positively, and it is something that can be used negatively, just like a knife in the kitchen.
Okay. Thank you so much, Ali. Viewer, you have been watching Take on Tech, a program that unpacks technological concepts, gives you examples from a panel of experts. And today we have been discussing fintech opportunities in Kenya. We didn't even go into like what are the real opportunities. I think because there's still so much information on this. Our panelists were Mary Mwangi, the CEO of Data Integrated Limited, George Njoroge, the CEO of East Africa Data Handlers, and Ali Kasim, the co-founder and CEO of Kipochi. My name is Grace Gidaiga. Please join us next week, same time on this show. Goodbye.